The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Hello there, and welcome to Talking Tech from Progressive with George O'Connor and myself, Ian Robertson, the podcast where we talk about the UK small and mid-cap listed tech market and try and bring some facts and understanding to bear. George, how are you doing? I hear you've been out partying.
Hey there, Ian. Yes, I have been partying. I was at the PLC Awards and tech was a winner across a number of categories. So first of all, its own category, and that was Tech Company of the Year. That was awarded to Rightmove last night. Clearly, Ian, as we both know, when you have a winner there, everyone gets nervous because the next gap in the share price is down. So come in this morning, Rightmove has a set of results and you're there, so blessing yourself. Anyway, good news, nice and strong set of results. Share price up on the day. Isn't that an amazing result the day after I won my PLC award? So that was very pleasing. Other tech awards in there. There was one for the guys at Games Workshop. I'm going to say, Ian, can you guess who was Newcomer of the Year?
I would hazard a guess at a fruit-orientated business.
You would be right, absolutely. And then last night was the 40 years anniversary of the PLC Awards. Doesn't time fly? And the winner of that one was Sage.
Keeping the foodstuff theme.
Keeping with it, yeah, but what we've sort of almost forgotten is that Sage was a 34 million IPO and it has lived on the London market for all of that time and has paid back investors hugely through that. Anyway, Ian, what have you been looking at recently?
Well, the thing that caught my eye this week was Pinewood. The fact they've just gone out and eventually bought this Seez business that they had a sort of 10% stake in, this AI chatbot for car dealerships. Car dealerships, the whole idea of interacting with your customer is hugely important. So you can understand why Pinewood have gone out and spent what is now $46.2 million in total on this. That's a fairly chunky price to be paying for something that at the end of 2024 only had an ARR of $4.4 million. That said, that was a 5 times increase on the year before. And looking forward a year, they think it's going to go up 3 times. So clearly this is a growth business. And whilst I do think that Pinewood probably could have got something together themselves over time, it's a question for this business. It needs to get product ready. It needs to get a full suite of products ready. And buying it was probably the best way of doing it strategically. But it does raise the question that not much in the way of a share price reaction. Yes, the share price has gone up, but it's on the back of some other positive news in terms of trading and also winning some customers. But what I'm trying to get my head round is that what am I really getting for my $46.2 million? Am I getting any real IP? Am I getting IP that it's an AI IP? Or am I just buying a business that's reselling somebody else's model? They don't have a model. You're not going to get a model for only $46 million. So I've bought a reseller. What value does that have long term for us? I'm struggling with this as to how this works going forward. And it's heightened by what we sort of hear out of Dot.Digital, another company talking this week. In their results presentation, they were saying quite a lot about AI and how they're bringing it in here, how bringing it there, understanding how customers are using their products in terms of their customers, how people buy things, how people engage, what you need to do to get people to engage and react via their various means of communicating, whether that be websites, whether that be SMS, whether that be WhatsApp. And it's difficult, though, with Dot.Digital. They weren't actually saying, well, we're going to be able to charge this much more. The whole pricing structure is still a little bit of a mystery to me. And perhaps not helped by the fact that when you go and look at what the likes of ChatGPT say about their own pricing, they're refreshingly frank in saying that they don't know. We don't know where this is all going to go. How much is this going to be? Is this going to be $2 a month sub, just like a little functionality on every desk, as it were? Or is this going to be being charged out at $200, $300 an hour? I don't see how it's going to evolve.
The conversation we had a couple of weeks ago was all about DeepSeek, and DeepSeek was going to be that disruptor from a pricing side. As this AI world goes through a sort of similar, like any other tech cycle S-curve, we do see the price change through the curve and indeed through product maturity. The gamble is that pricing comes down as life goes on. But your point is deeper than that. You're expressing concerns about, I hate to say, fundamental product ROI. I would imagine you would have been more optimistic about it if the companies were giving you a strong ROI narrative based on use cases. But Ian, is there a risk that you're being too harsh? Because it still is early on in the life cycle of the technology. And for me, the positive that you said was that we've moved from talking about products which are, coming downstream, it's on the roadmap, to actual products that these companies are selling. So Pinewood now has a product that it can sell that has an AI badge on it. Do you see the positives in that as being the overriding story? They are now relevant to buyers in their end markets, and that could be existing or new or expansion folks. Is that not the plus?
Yeah, so one of the issues that Pinewood came out with, that 80% of sales of dealer management systems into the US have got a chatbot functionality attached. So yes, they did need the product, and it does demonstrate that the customers, in terms of the dealers in their case, do understand that there's a need. To a certain extent, you have to feel that, would I be a good management team if I went out and announced to the world exactly how much I'm going to charge and how much I'm going to make from my product? Because on the one side, I've got customers, and also on the other side, I've got my AI model provider who is sitting there thinking, I don't know what to charge because I really don't have that much visibility as to what the end use is. And if they come and tell me I can charge £200 an hour for functionality, then that's what I'm going to charge. So it's an interesting set of dynamics as to where the AI providers start pushing their efforts, because you have to sort of make yourself relevant to the AI provider without making yourself almost a victim, as it were.
Also, if we think of it relative to the underlying supply chain here, so we flagged up DeepSeek from an LLM perspective, we can do it cheaper. If we go one back and then think, what's the story from the semis world? We're not seeing the pinch or hearing evidence of the pinch there. I don't know if you listened in on NVIDIA's earnings. They're talking about, continued strong demand on Blackwell, and the sort of the bears on the stock would have been expecting some, frightening words from NVIDIA in the sense of, people are now sort of revisiting orders that they'd had, particularly on the hyperscaler side, and that there was no mention of that. But absolutely, I think you've got a great point. When does pricing change?
And where does the value go? Because is ChatGPT not reselling NVIDIA capacity in some ways? So we have to get our heads around, we think we've only got one supplier at the chip side of things, but are we going to have one or two or three or four or five or six providers at the lower level? I'm trying to get my head around whether this model is going down to many, many sellers, or whether it's going to be quite focused, or whether we end up a couple of years down the line with people going, well, I'm going with this piece of software for my particular vertical, but one of the reasons I'm going with this vertical provider is because it's got ChatGPT inside. In which case, where is the value going?
I want to say that value moves upstream as you move through the adoption cycle. But for the early stage, all of the value is at that LLM stage. And again, going back to DeepSeek, what we saw with DeepSeek was that was then being cracked. And that was going to push value further downstream to the sort of the application level. But in fairness, Ian, for both of us, every other single application software company, they must have AI as part of the product roadmap. But that was last year. What we're looking for now is AI as part of the revenue makeup. However, as we go through the Q4 numbers, we're seeing this absolutely in terms of the semis side of life. And we're also seeing it from the professional services side of life. Roll your sleeves up. We've got to get AI done. Let me bring in Accenture or someone. And they're going in now. And you could say, well, that's just market maturity, or rather immaturity. Customer themselves don't really know what to do, don't have the skills in-house. So what do? You tap in a third party.
It's Millennium Bug all over again.
If only it was.
It's so fashionable to roll out Cisco, but it looks in some ways more Millennium Bug than it does Cisco.
To your point, though, as we were on the application software guys, what we're not getting through Q4 reporting is any kind of uptick in terms of revenue growth rates for next year. Now, Ian, you could say, well, George, clearly there's a general lack of visibility. You want to be nice and conservative, so just keep it down. But the other side is that if you do have these new products, you do have these adjacencies that you're about to exploit, then there should be some boom, it's getting better and numbers going up. And we are resolutely not seeing that. Now, you could say, well, they're also concerned on pricing, hence they want to keep themselves covered by having low numbers. But then the other side, Ian, is that, Microsoft is stiffing me with price rises.
Oh, yes, they are 42% today.
So certain providers are quietly racking their prices up. Sage did it last year. They're doing it again this year.
Well, that's interesting because when we look forward, you can keep putting your price up, but then do we have a change event? And of course, the big change event is AI implementation. So maybe the issue with people not getting exciting guidance about 25, 26 is the very fact that quite rationally, IT managers, the people with the money, are sitting there thinking, well, actually, I might have to actually not so much put an AI functionality in, but actually say, I've got to change my whole damn stack because I'm not going to have the AI functionality I want from my existing provider.
Can I ask you to remove the cap that you've put on as head of IT or DP manager and put on your fund manager cap now? What does this make you think about the potential in terms of new IPOs to come onto the market? Because if a new IPO comes in, it'll be telling you we're the AI guys. So what should your warning words be to the listener?
I think it's an odd situation. My worry about anything AI orientated coming into the UK small and mid cap space would be, what are you doing here? There is many things that you can use AI for that can improve your business, but the idea that your functionality or you're going to get better finance environment, ecosystem, you're just not going to happen. I'd like to be a bit more positive about it than that, but in many ways, it's just the classic cycle we see with AIM is that whether it be big data, whether it be machine learning, you just end up with, here's something that's packaged with the right label.
The trend is usually your friend. Ian, are you suggesting that it may be a false friend?
Well, I struggle to remember a real big data, and I struggle to remember that many proper internet security companies.
I'm reminded, back in the day, an IT professional services company active in capital markets, they went out and they bought some tech, and it was called KX. They bought it off a bunch of wily Californians, and they went back a few years later and bought the rest of it. And now the company has unloaded the professional services side, FD Technologies, into EPAM, a really good home for it. And they will soon relabel themselves as KX and do a whole flurry of really exciting things. And possibly that's Pinewood. The build and versus buy decision, this could be their future.
To be fair to KX, yes, there is an AI story there, and it is a real one. It's a question of definition of what is your obtainable market, your relevant market, rather than just something that could be described as AI. The broking story sounds very sexy, but you don't want to manage the business to the broking story. You want to manage the business to the actual real life story of where you have fast moving, rapid data coming in like crazy. You have the world leadership position, rather than what might be the broking story, which is that we can take on the world because we can do very fast data, and that's all that matters. It's not all that matters.
Ian, on that bombshell, don't manage the business to the broking story. What? Thank you very, very much for your time and thoughts. Looking forward to catching up on the next one.
Oh, thank you too. Yes, don't manage it to the broking story.
Brought to you by Progressive Equity.